Hello guys, this is Thomas from Finite and welcome to today's video, which will be something other than recap for a change. And it's a question: how far is the S&P gonna go? Um, this question is obvious because as the pandemic continues to develop in the world and USA still leading the amount of infected people, and the economy, uh, although is slowly going to reopen, has been crushed by the coronavirus. The market seems, you know, kind of indifferent to the reality that's going on, and uh, personally, I don't think it's gonna recover all the way. Uh, Although the Fed is dumping new money, the interest rates have gone negative. Uh, I think that's just a really a frantic uh, attempt to swipe the pandemic under the carpet, and I don't think that's gonna work because eventually, uh, you know, uh, the companies will run out of the reserves they have, and we will see, if not a new low, then at least a severe pullback to the lows again. Uh, but as a technical trader, I have to admit that as long as there will be bullish signals, I will of course be taking at least intraday trades to the long side as well, because I'm always protected by a really tight stop loss, and even some slippage will not on one or few trades will not affect uh, my outcome too much. So this is a video especially for swing traders or core traders. So let's ponder on the topic of where should the market stop with its upwards momentum right now. So to do that, we will use the volume profile, and we're gonna need to adjust some things. So the row size will need to be bigger, and maybe even a little bit more. Okay, now we're gonna place it on the left. So this is a kind of a tutorial on how to set up your volume profile, at least for a quick look. And now uh, we can, by the way, see it from the chart itself, but the volume profile will give us a more precise measurement of those low volume areas. So we can see that from 3045 to around 3070, there is an area with a low volume, which is likely to act as a resistance. So the nearest resistance would be this area. Let me mark it for you. All right, so around here, then of course we have the swing high over there at 3140, and eventually another low volume area starting right above it at 3154. Do I think we're gonna see this high over prices Frankly, I don't think so. But as I said, as technical traders, we have to check what the market thinks and how it behaves. We do not make money by imposing our thoughts and wishes to the market, because in that case we will quickly be proven wrong. Another thing I want to point out here: look at the volumes. So there's something called ending volume, which is typically a huge spike, as you can see here, and this corresponds to this candle, this doji bar. And as you can see, after this doji bar, we've seen a couple days of retracement from the initial push down. And likely, we see the similar thing right around here, where the volume is spiking from the usual range, and the resulting movement is to the other side of the movement that previously has been going on. So the market failed to make a higher high, then this swing high started to move down and was met with huge support from the buyers, and it reversed and formed some kind of a bull flag. And as of today, it's climbing over the 3000 area, and possibly to the 3040 region. We'll see. So those are few tips to keep in mind. The overall state of the economy is, I think, far worse than what the index is showing us. So don't be fooled. Be a little bit more skeptical than usual. And if you're swing trading, uh, just select the least correlating stocks as possible with the market, um, and be sure to tighten up your stop losses, because uh, in my opinion, as I said, the index is really likely to fail anytime soon. So, guys, hope you took something from today's uh, analysis, and I will see you today with another recap, of course. Thank you, guys.